Good morning, traders, and happy holidays to all of you from Market Geeks. This is Roger Scott, and I'm the senior instructor here at Market Geeks. A while back, we received several emails from our blog readers asking for a tutorial on how to determine if markets are choppy, which is another way of saying range-bound, or trending. I figured that during the holidays would be a good time to post a video explaining exactly how to make this determination. Before we begin, I have to go through the required government disclaimers, so please keep in mind that this video is not intended to be a trading recommendation, and all examples that you see here are for educational purposes only. There is a substantial risk of loss when trading futures and options on futures. Please use risk capital and read the required disclaimers carefully before we move on. Okay, let me begin by explaining why it's important to determine if market is trending or choppy, and then I will explain the different characteristics and show you a few indicators so that you can make this determination yourself in the future. One of the biggest reasons why you want to determine if markets are trending or choppy is because some trading methods and technical indicators will not work well with choppy markets. And similarly, some trading methods and indicators will work very well with choppy markets, but will fail miserably when markets are trending. So before you trade your favorite breakout strategy, you want to make sure markets are trending. And before you apply your favorite reversal strategy, you want to make sure the markets are choppy. Otherwise, the markets will run all over you like an angry train. The first thing I look at is visual analysis with basic trend lines and the slope of the trend lines. Most trending markets will have a slope greater than 20%, either upwards or downwards. An important factor to look at is how often and fast prices deviate from the main trend, and more importantly, how fast they catch up with the main trend. Deviation is okay as long as price snaps back in line with the main trend line. Now let's look at choppy market conditions. Choppy markets tend to trade horizontally in a trading range without much of a slope. The price pattern typically goes back and forth from a high level to a lower level, back and forth without much directional movement. The range may be tight or wide, but overall the market tends to stay sluggish, and prices typically drift slowly from the higher level back down to the lower level, back and forth over and over. The second and equally effective method to determine if markets are trending or range-bound is to use technical indicators. A simple indicator to determine if markets are trending is a 20-bar exponential moving average. If the market is trading above the 20-bar exponential moving average, the market is in an uptrend. And if the market is trading below the 20-bar exponential moving average, the market is in a downtrend. Now, let's look at a good indicator to use when markets are choppy and trendless. Typically, you'd want to use an oscillator. These are indicators that measure momentum and are fairly accurate at measuring short-term overbought and oversold levels. A solid indicator, technical indicator, that works well with choppy markets is the Rsi Indicator. This indicator is not overly sensitive and responds fairly well to overbought and oversold levels. When the indicator jumps above 70, it signals overbought conditions. And when the indicator turns below 30, it suggests that market may be oversold. For short-term market swings, I prefer to use a 5-bar RSI time frame period. Here's an example of an E-mini S&P futures contract using daily charts with the RSI indicator below the chart. You could see by the corresponding arrows that the RSI indicator does a good job of measuring short-term overbought and oversold levels. Each time the RSI gets above 70, the market tends to lose steam and reverse down. And each time the RSI turns below 30, the market tends to rally back up. Remember, the most important part is to determine if markets are in a trading range or trending before using any type of technical indicators. That's it for today's lesson. Remember to check back weekly for new tutorials and visit marketgeeks.com for professional trading education. This is Roger Scott wishing you happy holidays and the best for the coming New Year's.